Hello and welcome to today's My Solo 401k Financial YouTube webinar. We're just going to confirm the audio and get started here momentarily. So looks like the audio is good. So we're going to give me 1 second. We're going to get started. Please let me know if you cannot hear my voice or see the screen. We've got a great update today in terms of the proposal in Congress to ban the ability to make backdoor Roth IRA and backdoor Roth solo 401k contributions. So give you some links real quick. So if you could please like this video and subscribe, then if you could please like this video and subscribe, we'd really appreciate it. Yeah, good point. Okay, so please go ahead and chat over questions through the, if you're on YouTube, you can chat over questions and we'll go through the questions after we get a chance to take a look at the slides. So if you have to leave too, you can come back to the same link as the recording will be available on YouTube. So let's first start in with some housekeeping items. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So the good news to share is that yesterday, and there's been good stories and smoke, but we actually got confirmation from President Biden that the proposal he announced yesterday, that the Build Back Better Act is not going to be enacted by the end of the year. So what part of the Build Back Better Act, and if you've been following our channel and our community, you know that we've been giving regular updates on this proposal, but part of the Build Back Better Act, which is the social spending bill, included various retirement provisions. So there was a number that they were all taken out about a month or so ago, but then came back in and then were included in the version that was approved by the House a little before Thanksgiving. And so one of the provisions that was included in the version approved by the House would have banned the ability to make backdoor Roth IRA as well as backdoor Roth solo 401k contributions starting January 1 of next year. So that version that was approved by the House was sent over to the Senate. And so if the Senate had approved their own version of the Build Back Better Act, which would have been slightly different, then it would have been sent to the House. And then if that included the ban and it was signed by the president before the end of the year, then the ability to make Mega Backdoor Roth solo 401k contributions would have gone away starting next year. But yesterday evening, President Biden acknowledged that the Build Back Better Act is not going to be enacted this year. So it doesn't mean that it will be enacted, right? I mean, it's going to be punted effectively until next year. And so, of course, who knows whether the Senate will take it up again, right? I mean, there's always going to be, other things that could happen, right? Geopolitical events, right? That could change the focus. They could lose the momentum. The provision may not be included in the version that, even if the Senate does come up with their own and approve their own version of the Build Back Better Act, the version that they approve next year may not include the ban on the ability to make backdoor Roth IRA as well as backdoor Roth solo 401k contributions. So there's definitely not a certainty that it will be enacted, But what is certain is that it won't be enacted in 2021. So what does that mean, right? That means that if you set up a plan, if you set up a solo 401k by the end of the year, you will preserve the right to be able to make mega backdoor Roth contributions for 2021. You'll also preserve the right to make mega backdoor Roth solo 401k contributions for 2022. Because even if a provision is included in the version that's approved by the Senate, say in 2022, and that it's ultimately enacted in 2022, they wouldn't make the provision retroactive and they wouldn't make it effective in the middle of the year. So that means that the earliest that it would be effective would be after 2022. So we'd have, if you set up the plan again by the end of this year, set up the solo 401k by the end of this year, you'll preserve the right to make those mega backdoor Roth contributions for 2021 to your solo 401k anytime up until your business tax return deadline, including any timely filed extension. You'll also preserve the right to be able to make mega backdoor Roth solo 401k contributions in 2022. Because again, even if they approve it next year, the earliest that it would be effective would be the end of next year. So you'd still have 2022 to make contributions. So it's absolutely good news. And even if it does become effective, presumably we'll have much more notice so things can proceed in an orderly and calm fashion. So we definitely wanted to get on the YouTube channel today and share this great information. And so we'll take a look, a little bit more details here on this slide. We'll also talk more about, okay, well, how do you set up a plan? Is there still time? Things of that nature. So in short, yes, there's still time, and we'll talk a little bit about how to do it. But again, just to emphasize, I mean, what is a mega backdoor Roth solo 401k? So that is a solo 401k plan that allows you to make mega backdoor Roth contributions. And so as a mega backdoor Roth solo 401k contribution, you could theoretically get up to, if you have the self-employment income to justify it, you can contribute up to $58,000 or even $64,500 if you're 50 or older for 2021. And then with the increase in the contribution limits for 2022, next year, if you have the self-employment compensation to justify it, you'll be able to make up to $61,000 or $67,500 if you're 50 or older. So the ability to get money into a Roth account and then have the ability to have tax-free growth on that money is tremendous, right? There's no other retirement account out there that comes close. So when would you have to set up the plan? You'd have to set up the solo 401k plan by the end of the year. So we make it very easy to do that because all you have to do is sign the document. So we'll prepare those solo 401k documents and give you a link to our secure portal where you can download the documents that were drafted specifically for your business. We'll do that within the same day or 24 business hours. So you can open up the account, you can make the contributions next year. You can take your time because you'll have until your business tax return deadline, including any timely filed extension now, to make all types of contributions. Your mega backdoor Roth, your employee, your employer, etc. So how do you do it? Again, you sign up on our website, mysolo401k.net. We email you the documents within the same day or 24 business hours to establish the plan. And then you just sign them. And now you've locked in the ability to make those contributions. So it's absolutely great news. And we can proceed calmly. We've got at least 2 more years as long as you sign up by the end of this year. So I see that folks have started to tee up questions, which is fantastic. Let's go through some of these foundational concepts, and then we'll turn to all the good questions. And again, if you have to go, please come back to the link and you'll be able to watch the recording later. So who's eligible to set up a solo 401k? Well, a solo 401k is for an owner-only business with no full-time W-2 employees. So in terms of some of those top eligibility considerations, do you need a separate entity? No, you don't. Obviously, if you do have an entity for your business, that's fine, but you can be a sole proprietor. There's no need for a formal legal entity. The key is that you're reporting earned self-employment income on your taxes. There's no minimum amount of earned self-employment income, But of course, your ability to contribute to the plan is going to be based off of your earned self-employment income. You can't save more than you earn, right? So, but if you have the earned self-employment income to justify it, you can get as much as $58,000 or even $64,500 into your Roth solo 401k via the Mega Backdoor Roth for 2021. Your spouse or business partner can also participate in the plan as long as he or she is reporting his or her own earned self-employment income. Let's say you have husband-wife business, right? They're both reporting their own earned self-employment income. In that case, it's going to be one plan sponsored by that one business, and each spouse, each participant would have their own separate set of accounts, and each spouse is going to be able to make contributions based off of their circumstance, right? Based off of their age, based off of their own earned self-employment income, whether they're participating in making contributions to another plan, et cetera. And as part of our support, we're helping clients, we're fielding questions every day in terms of how much you can contribute. We also have a wealth of information on our website. For example, we've got webinars, slides, deep dive sessions in terms of how much you can contribute, contribution scenarios. We've got a calculator, how do you report it on your taxes down the line. So we can definitely support you in that regard. Next top consideration would be, well, can I have a plan even if I have a W-2 job somewhere else? And the answer is yes, even if you're participating in your W-2 employer-sponsored plan. The key is that you've got your own earned separate self-employment income, right? You could have a W-2 job somewhere and maybe you're an IT professional, and then you've also got your own web hosting business on the side. Well, as long as there's no employees, non-owner employees working for any business owned by you or a spouse, if any, you're going to be able to set up a solo 401k for that side business. And you don't need an EIN for your self-employed business, right? If you're a sole proprietor, you just do everything under your social security number, that's fine. You don't have to go out and get an EIN for your business to set up a plan with us. Now, we will obtain an EIN for the plan, which meets the regulatory expectation as part of the onboarding process, but there's no EIN that's needed specifically for your business. So those are some of the top considerations. The December 31st deadline, again, the key here is just setting up the plan. A 401k is a legal entity. It's a trust, right? The assets are not your business assets. They're not even your personal assets now that you can use unfettered, right? When you put money into a 401k, you can't use that just for whatever you want. There's rules. So it's technically a 401k is a trust because the assets are held in trust for your future benefit. So like any legal entity, it's the documents that create it. So signing of the documents is what sets up the plan. So we make it super easy because all you need to do is submit our online application. It just takes a minute. You make payment. We email you the documents within the same day or 24 business hours. Specifically, we're going to send you an email with a link to our secure portal where you can download the documents. All you got to do is sign the documents, and that locks in the ability to make those contributions all the way up until your business tax return deadline, including any timely filed extension next year. So yeah, again, you just have to sign by the end of the year. You can make both employee and employer, as well as the voluntary after tax, which is how you make the mega backdoor. You can fund the account in 2022. You can open the account in 2022. You can contribute up to $58,000 or even $64,500 if you're 50 or older. Again, the process is online app and payment. We draft the documents. Step 3, you sign the documents and you're done. So you can sign the documents with an electronic signature, right? If you got electronic signature software. Again, the key is just getting those documents signed by the end of the year. And now you can take your time to get the EIN, which we will handle as part of our services, open the account, which we will handle as part of our services in terms of drafting documents to open the account at the bank or brokerage of your choice, like Fidelity, Schwab, etc. Make those contributions in 2022. You don't even have to have the EIN number by the end of the year. The key is just having the documents prepared and signed by the end of the year. You don't have to open the account by the end of the year. You can do that sometime next year. all types of contributions can be made. And these slides are going to be posted on our website. There's a link to a blog post that we posted last night when we got official word came down from the Biden administration. So we'll make these slides available. This is a great slide here. We've got IRS publication 560, which is the landmark guidance for self-employed retirement plans, including solo 401ks. So there's a chart on page 3, which makes it crystal clear that as long as you set up the plan by the end of the tax year, when to set up the plan by the end of the tax year, that'll lock in the last date for contributions as your business tax return deadline, including any timely filed extension for both elective deferrals, which are also known as employee contributions, as well as employer contributions. And this makes sense, right? Because for a lot of people say, well, I have a W-2 job, I got a 401k, I got to make the contribution by the end of the year. For self-employed people, oftentimes you don't know how much money you've made until after the end of the year. So since your ability to contribute is based off of how much you made, your earned self-employment income, you need time, and the rules give you time. It gives you up until your tax return deadline to make those contributions. And then next question, which is another good question that folks will ask, if I adopt a plan here in December, how can I make contributions based on income that I earned in January? Well, the effective date of the plan is going to be January 1 of 2021. So you can, and that's the industry best practice. So that means that for all income earned and reported for 2021, self-employment income that's earned and reported for 2021, you're going to be able to make contributions based off of that income, even if you sign the documents on December 31st. And here's another good FAQ. We'll hear from folks that their CPA or tax advisor is saying that the employee contribution must be made by the end of the year. And that would be true if you had a full-time employer plan, like your W-2 day job plan. But for solo 401ks, the rules are different. And it makes sense for the reasons mentioned above, right? And it's confirmed by IRS publication 560. So you don't have to worry. You definitely have time to make all types of contributions. So what happens if I don't open the plan by the end of the year, meaning set up the plan documents? Well, if you set up the plan documents before your business tax return deadline, you could still make the employer contribution. But if you want to make that employee contribution, including the Mega Backdoor Roth, because how you make the Mega Backdoor Roth is you're making a voluntary after-tax contribution, which is a type of employee contribution. So if you set up the plan after the end of the year, you're only going to be able to make employer. So you'd have some benefit, but you'd miss out on the Mega Backdoor. This is a great chart as it just clarifies that the contribution deadline is really your business tax return deadline. So if your business is a sole proprietor, you're reporting your earned self-employment income on a 1040, then it's going to be your 1040 deadline, right? So that's April 15th or October 16th if you file a timely extension. Whereas if your business is taxed as a partnership or an S Corp, then you're going to go with March 15th or September 15th if you file a timely extension. Our setup process is, we have an online application. Again, we email you the documents within the same business day or 24 business hours. And all you got to do is sign the documents, and that'll preserve the right for you to make those contributions anytime up until your business tax return deadline next year. I want to get to some of these questions. Some of the top benefits, obviously the Mega Backdoor. Other things are the ability to invest in alternative investments, the ability to take a 401k loan. So all of the above. We prepare the loan documents. You can absolutely invest in crypto, real estate, etc. We provide all the compliance support with that regard. So if you do have questions, please continue to chat them over. We'll go through these sequentially. So any links to the most updated bill provisions. So we could definitely provide links, but I'm not sure that they have much utility at this point because everything got punted till next year. Presumably they would sort of wipe the slate and come up with new provisions. So it'd be more useful to just wait and see, number one, if they even regain momentum to try to pass the bill in the Senate? And if so, what's the text that was introduced in 2022, right? What does it say? Because they're going to have to redo it anyways, because they're not going to make a retroactive, they're not going to pass a retroactive bill. Next question. And thank you so much for all the your participation and all the great questions. Can you comment on the possibility of a bill in later January being retroactive to January 1 in terms of blocking? Yeah, they wouldn't do that. They wouldn't make it retroactive. That would open them up to challenge under whether it's even an effective piece of legislation. So that's why I said we've got at least until 2022. Oh, right. Good comment. Thank you. And I'll just note too that we have our community site. We are hosting daily webinars this time of year just because there's so much demand for information. And so we want to have a venue to answer questions and share information, because usually if one person has a question, other people have the same question. We've also got forums on that community site. So really the best address is mysolo401k.net/mycommunity, right? So you can post questions in our forums. You can come to our daily webinar and continue the conversation. So a mega backdoor Roth in layman's terms is a way for you to get a relatively large, to contribute or deposit a relatively large amount of money into your Roth solo 401k. So when you have a Roth account, like any Roth account, whether it's a Roth 401k or Roth IRA, the money goes in on an after-tax basis. So you're not getting any type of income tax or taxable income reduction benefit now, but the idea is that the gains could potentially be tax-free, right? If you follow the rules for making what's called a qualified Roth distribution. So in simple terms, you leave the money in the account until you're retired. So all the gains could be tax-free. So you could essentially seed that Roth account with more money, meaning you have a potential for more gains that are tax-free. We definitely have lots of folks that refer business to us, and so we would love to have a chance to work with you. So please contact us at business@mysolo401k.net. Thank you so much for the participation. If a plan is established before year end, I know contributions can be made next year. Is there some sort of election for deferrals that still need to happen, even though it can fund later? So you want to, that goes to the point about why you have to have the plan set up before the end of the year. So once you have that plan set up for the end of the year, but before the end of the year, that'll lock in the ability for you to make all types of contributions: employee, employer, the voluntary after tax, etc. So hopefully that helps. Thank you so much. So hopefully we gave you the basics as far as the Mega Backdoor Roth. We've got great webinars on our website that go into a lot more of the detail in terms of what it is, how the rules work, etc. So I'm going to send a link over. If you could check out that link, please, and that'll give you some good information, more in-depth information about just Mega Backdoor Roths generally. Next question. I'm converting much of my solo 401k to solo 401k Roth this year. I'm converting as much as I can afford in taxes. Is there any advantage in making a pre-tax contribution this year also? So it sounds like you already have money in your solo 401k, specifically in a pre-tax sub account, and you are transferring that money from your pre-tax account over to your Roth solo 401k sub account. So when you do that, right, the money's going to go from a pre-tax status to an after-tax status, specifically Roth. So in that transfer, that becomes a taxable event. So for example, if you had $100,000 in your pre-tax solo 401k sub account and you transferred that $100,000 over to your Roth solo 401k sub account, you would need to add $100,000 to your income for the year of the conversion. So if you want that to be taxable for 2021, you would have to move the money over from your Roth solo 401k sub account, from your pre-tax solo 401k sub account to your Roth solo 401k sub account before the end of the year. And that's the way that it's always been, and nothing about this proposal impacts that. I mean, there was part of the proposal that would limit the ability to make pre-tax to Roth conversions, but it wouldn't go into effect for 10 years, and it would only apply to high income taxpayers. As far as your question, is there any advantage in making a pre-tax contribution this year also? Certainly, right? Because now you can reduce your taxes this year. I mean, that would be the advantage. That's why people make pre-tax contributions. So that would offset some of that increase, but now you'd have more money in your pre-tax account. So if your goal is really to get as much, to move as much money into a Roth account, obviously making that pre-tax contribution is going to undermine that. Hopefully that helps. Next question, can I use existing self-directed Roth IRA and Ameritrade and use your company just to help me open Gemini IRA LLC to invest in crypto? Absolutely. So that's one of the top reasons people set up Roth IRAs with us, is so that they can have checkbook control over their Roth IRA money, as well as invest in cryptocurrency like at Gemini. And one of the advantages of having a IRA LLC is that you can hold the private keys associated with your cryptocurrency in a cold wallet that is stored in a safety deposit box associated with that LLC bank account. If you look at our recent video that we did, you can find it on our YouTube channel regarding the recent McAnulty case, which talks about storage of precious metal, meaning gold coins, for example. You can read more about those storage options. Thank you for the good question. Next question. I have a non-Roth solo 401k trust account at Chase. How would I go about creating a Roth solo 401k? Well, so you have to have a plan that allows you to have Roth money. So if your plan doesn't allow you to have Roth money, you'd have to change it over to a provider that does offer a solo 401k that allows for Roth funds. And if you want to have Mega Backdoor Roth funds, you'd have to make sure that the provider also allows for the voluntary after-tax contributions and then in-plan conversion to the Roth solo 401k sub-account. As far as the account, as far as the accounts, you'll need separate accounts, right? You'd have your pre-tax sub-account for your pre-tax solo 401k funds. You'd have a second Roth solo 401k sub-account, and then a third voluntary after-tax solo 401k sub-account. So all those accounts, for example, could be at the bank. Each account would need to be in the name and under the EIN of the plan. So it's really twofold, the accounts and also making sure you have a plan, meaning the documents that allow for what you want to do. So Mega Backdoor is a term I'm not understanding. Please explain. So it's essentially a marketing term or an industry term that really alludes to the fact that this is a contribution strategy that allows you to contribute more into a Roth, effectively contribute more into a Roth solo 401k sub account than the typical Roth contribution limits. So there's different types of contributions that you can make to a 401k. You've got employee contributions, for example, as well as employer. And in the words of the IRS, When you're self-employed, you're both the employee and the employer. So you can make both types of contributions. Now, employer contributions are always going to be pre-tax contributions, whereas employee contributions, if the plan documents allow it, can be both pre-tax as well as Roth. The employee contribution limit, though, is, for example, for 2021 is 100% of your self-employment compensation, not to exceed $19,500 or $26,000 if you're 50 or older. So if you have a plan that allows you to make Roth solo 401k contributions, you can contribute up to $19,500 or $26,000 if you're 50 or older. If you have a plan that allows for the Mega Backdoor Roth solo 401k contributions, then you can make what are referred to as voluntary after-tax contributions, which is another type of contribution. The limit that applies to voluntary after-tax contributions is higher than the $19,500 or the $26,000 limit that applies to employee contributions. So you can contribute 100% of your self-employment compensation, dollar for dollar, up to $58,000 for 2021 as a voluntary after-tax contribution, reduced by any other types of contributions that you make to the plan, because you have to consider the overall limit of $58,000. So if you have the self-employment compensation to justify it, if you have a plan that allows you to do it, you could contribute and let's say you're under 50, right? You could contribute $19,500 as an employee Roth contribution into a separate Roth solo 401k sub account. And then you could make an additional $38,500 voluntary after-tax contribution, so for a total of $58,000, you put that $38,500 into a separate voluntary after-tax sub account, and then you could move the money from the voluntary after-tax sub account to the Roth solo 401k account. So at the end of the day, through that Mega Backdoor Roth solo 401k contribution, you would now have $58,000 in your Roth solo 401k account, which has the potential for that tax-free growth that we talked about earlier. So hopefully that helps. Thank you so much for the participation and good questions. Can I convert my solo 401k to solo Roth IRA? Well, so presumably you mean solo Roth 401k. So the answer is yes. You can convert pre-tax money in your solo 401k to your Roth solo 401k sub account, but you got to pay the taxes on the amount of the conversion. It needs to be reported because that is a reportable event on a 1099-R. We would handle that 1099-R as part of our services for no additional charge, and you would include the amount that you converted on your 1040 on your income for the year of the conversion. There's no limit, there's no qualification. Now, part of that, and I referred to that earlier, these retirement provisions, which included the proposed ban on the ability to make Mega Backdoor Roth solo 401k contributions. Another prong of those proposals was it included a ban on the ability to convert pre-tax money to Roth money. But that ban wouldn't go into effect for 10 years, and it would only apply if you were a, quote, high income taxpayer. So that also got punted, right? That's also not going to go into effect this year and maybe never, right? But if it would have gone into effect, it wouldn't have applied for 10 years. So we still have another 10 years. And also it would only apply if you were a high income taxpayer. So under the proposal, if that would be someone who has a taxpayer filing as a single person that has more than $400,000 of income, or taxpayers filing jointly more than $450,000. That would be the definition of a high income taxpayer. No, they're not going to make it retroactive. Yes, it's great news. Thank you so much for all the good questions. Please don't hesitate to keep chatting them over as we have time. So next question, if your solo 401k account holds crypto, do you know if you have to check off the box in 1040 that you hold cryptocurrency since there's no tax impact? So given that that's inside of your 401k account, just like any other investment, inside of your retirement account, you're not reporting that on your 1040. So the fact that it's a cryptocurrency investment versus another type of investment is not going to change the rule on that. Good question. What if I hire my next question? What if I hire my children, but it's really part-time, not full-time, under 20 in my business? Does that disqualify the business? So a solo in order to be eligible for a solo 401k, right? It's for an owner-only business with no full-time W-2 employees. So the technical term for a solo 401k is a one participant plan. So there are exceptions to that one participant requirement. One is for a spouse, for example, working in the business, or another owner of the business. Now, if you have children working in the business, they're obviously not going to, they're not going to fall under the spousal exception. They could fall under the partnership exception, but you'd have to make them at least 3% or more owner of the company once they became of age where they would be eligible. So stated differently, right? As long as the kids don't meet the eligibility requirements, right? Because they're, say, under 21, or they're not working 1,000 hours or more per year, or 500 hours or more per year for 3 consecutive years. So they don't meet the eligibility requirements. You could maintain the solo 401k. On the flip side, if the children do, right, they're 21 or older, they're W-2, they're working full time. If you want to maintain that solo 401k, you're going to need to make the child at least a 3% or more owner of the company to be able to keep that as a solo 401k. Otherwise, you're going to have to convert the plan over to a full-time employer plan that can accommodate the child, or I should say the eligible employee who's also the child. Hopefully that helps. And thank you so much for the great feedback. So next question. The 58,000, 100% of earned income limit on 401k is not aggregated with IRA contributions, correct? That is correct. So the fact that you're making an IRA or Roth IRA contribution will not reduce your ability to contribute to the solo 401k. Of course, you'll need to have separate income, right? Like if your only income is your earned self-employment income and it's $58,000, then you're not going to be able to double count that, right? And use that $58,000 to justify the IRA contribution, and then use it again to justify the solo 401k contribution. So the other piece to consider is that going the other way though, right? So in other words, when you participate in a qualified employer plan, like a solo 401k, your ability to make a deductible IRA contribution may be limited, right? If you make too much money, you may not be able to make a deductible IRA contribution. So the answer to your question, to be on point, is that the fact you made an IRA contribution doesn't limit your ability to make a solo 401k contribution, but the fact that you're participating in a solo 401k, if you make too much money, may limit your ability to make a deductible IRA contribution. But in sum, yes, effectively you could end up contributing more than 58,000. Hopefully that helps. Next question. Yes, yeah, I think that was a follow-up to that point, to the prior discussion. Thank you so much. Let me know if I missed the question on that one. Let's see. Does your Roth IRA include the possibility to make after-tax contributions which convert to the... Keep in mind, number one, we don't hold any of our customers' money, so we wouldn't hold that Roth IRA. But yes, I mean, you can make a backdoor Roth IRA contribution to fund that Roth IRA that then invests in the LLC that then invests in the cryptocurrency. And part of the good news, right, today is that there was a part of the ban was not just on Mega Backdoor Roth solo 401ks, but also backdoor Roth IRAs. So that got, that also is not going to be enacted this year. So that survives the ability to make those backdoor Roth IRA contributions. But you're going to want to work with your tax advisor to make that backdoor Roth IRA contribution to consider, for example, the pro rata rules. But assuming that you can make the backdoor Roth IRA, you could absolutely use the backdoor Roth IRA as a way to fund that self-directed IRA LLC to invest in crypto. So hopefully that helps. Next question. What is the advantage of having a 401k bank account in addition to a 401k brokerage account? It really comes down to investments. So keep in mind that one of the top reasons and use cases that people will set up accounts with us is they want to invest in alternative investments, say real estate or a private placement. And so a lot of people still want to have the ability, though, to invest in your typical traditional investments that you have through a brokerage account, right? Like an ETF or maybe the stock market, maybe between deals. So by having that bank account, though, now you get access to a debit card. Now you get access to certified bank checks. Now it's easier to ACH money out of the account, right? You might want to invest in a private placement. Maybe it's an apartment complex, you along with 50 other investors. Well, that investment provider might say, well, you need to fund the investment with an ACH. There are lots of brokerage firms that will open accounts for a third-party plan, and we prepare the paperwork to do that. We make it easy to do that. Like you got Fidelity, Schwab, TD, E-Trade, etc. But those brokerage firms won't allow you to ACH money out of the account. So if you need to ACH money to make your investment, you'll need a bank account. So that would be a simple example. Another one would be certified bank checks, right? If let's say you want to invest in real estate and you want to go to an auction where you need to have a certified bank check to get access to that auction, you're not going to be able to get a certified bank check off of your Fidelity brokerage account that you have for your solo 401k. So those are some good examples and use cases of why folks have both. And you can move money between them, keep in mind, between the bank and brokerage accounts for your solo 401k. Next question. Thank you so much for all the good questions. Is there a way to contribute the full $58,000 into the Roth account, but without the 25 contributions from the employer? Absolutely. You can skip. So the 25% limit is the limit that applies to employer contributions. Remember, you got different types, right? Employee, employer, plus voluntary after tax. So you could decline to make that employer contribution because that employer contribution is a pre-tax contribution. And if your goal is to maximize Roth, you just skip it. So you could put, say, 19.5, assuming you got the self-employment income to justify it, $19,500 directly into that Roth sub account, $38,500 into the after tax, and then move it from the after tax to the Roth so that you have the $58,000 in that Roth solo 401k sub account. Thank you so much for the question. If I'm W-2 employed, can I contribute up to $58,000? So when you say W-2 employed, I'm assuming you mean you have a day job and then you have a separate side business that sponsors your solo 401k, which is absolutely fine. You can have both. The fact that you have a W-2 job somewhere, even if you contribute to a plan, right, you're still going to be able to contribute up to $58,000 as a voluntary after-tax contribution, assuming that you got the self-employment income to justify it. So let's say, for example, you have a W-2 job, you participate in your daytime employer plan, you max it out because maybe you want to get a match or something like that. So you're putting in 19.5 into your day job plan. But then let's say you got a separate side business that's generating sufficient earned self-employment income enough so that you have $58,000 of self-employment compensation. You can contribute 100% dollar for dollar to the solo 401k as a voluntary after-tax contribution, and then move it from that voluntary after-tax solo 401k sub account to the Roth solo 401k sub account. So the fact that you made that employee contribution to your daytime employer sponsored plan doesn't reduce your ability to make a voluntary after-tax contribution to the solo 401k, because the voluntary after-tax sub account, the voluntary after-tax contribution limit is the 415C limit, which applies at the employer level. So it's not going to be reduced by contributions made to a plan sponsored by an unrelated employer like your daytime employer. Hopefully that helps. Absolutely, it's still available. That's the great news. Thank you so much for joining. And what's the deadline? The deadline is to set up the plan, meaning sign up and sign the documents. You don't need to open the accounts. You don't need to make the contributions until that'll, by signing up, that'll preserve the right for you to make contributions anytime up until your business tax return deadline, including any timely filed extension next year in 2022, right? So if you're filing as a sole proprietor, your business tax deadline is your 1040 deadline. That's April 15th or October 16th of 2022 if you file a timely extension. Next question. How much of the solo 401k can loans be taken out of the balance? Does the contribution need to be in there a set number of days before the loan could be taken out? Great question. So you can borrow, so you have to have a plan that allows you to take a 401k participant loan, which ours does. You have to prepare loan documents, which we do as part of our service for no additional charge. And then each participant is able to borrow up to 50% of their balance, not to exceed $50,000. It has to be paid back in either monthly or quarterly payments. You decide. Equal payments of principal and interest, where the interest is prime plus 1%, and those equal payments are spread out over a 5-year term. So you would literally take the money from your solo 401k account. We would prepare the loan documents, including the payment schedule, and then you would pay it back to that account according to that payment schedule. If let's say you want to get more money in there so you can take a bigger loan, right? Because you can take 50% of the balance, not to exceed $50,000. You can absolutely make a contribution and then turn around and use those funds that were contributed as a contribution to justify your solo 401k loan. Great question. The reason to go backdoor is, again, you want to make greater than the $19,500 or $26,000 Roth solo 401k contributions that you can make. Another good question. Better to convert the voluntary after-tax contributions to the Roth solo 401k or Roth IRA? What are the advantages of each option? Well, I would say most folks probably go the Roth solo 401k route because that'll keep the money in the plan, because they may have other objectives, right? They want to invest in alternative investments. For example, it's much easier to invest in alternative investments through the Roth solo 401k versus the Roth IRA, right? With the Roth IRA, you'd have to set up an LLC underneath that Roth IRA to have the checkbook control. Also, if you're looking to invest in real estate and you want to invest using leverage, you'd have to use a special type of leverage or loan called non-recourse financing to acquire that real estate. If you were to make that debt financed investment inside of a Roth solo 401k, it's going to have certain tax advantages. Specifically, the income attributable to that investment is not going to be subject to the unrelated debt finance income tax. There's an exception for that type of income inside of a solo 401k. Whereas if you made the same investment inside of a Roth IRA, it wouldn't have that same advantage. So the income would be subject to that UDFI, unrelated debt finance income tax, payable by the Roth IRA. But another advantage besides alternative investments would be loans. You can take a 401k loan from your Roth solo 401k, whereas you can't take a loan from any type of IRA, including a Roth IRA. So let's talk, another advantage would be contributions, right? There's much higher contribution limits, as we're learning with the Mega Backdoor Roth. Another advantage would be costs, right? So, but let's talk about typically a self-directed Roth IRA is going to be more than a self-directed Roth solo 401k. As far as the Roth IRA, why someone would go that route, it's probably RMDs. So there's no required minimum distribution that applies to a Roth IRA, whereas a RMD does apply to a Roth solo 401k. But practically what a lot of folks do is, if they're of the age where they need to take a required minimum distribution, right? They're 72 or greater years of age, they will move their money from their Roth solo 401k to a Roth IRA before the end of the year so that there's zero balance in that Roth solo 401k so they don't have to take a RMD. So hopefully that helps. Thank you so much for the good question. Do Roth conversions count towards the year's total contribution limit versus direct Roth contributions? No, they do not. So you can convert as much as you want from your pre-tax sub-account of your Roth solo 401k to your Roth solo 401k sub-account. There's no limit. It doesn't count towards the Roth contribution limits. Next question. I have a Roth IRA with a start date of 1/1/2020. Can I preserve this earlier start date by transferring my solo 401k to my Roth IRA? So you're going to have to consider the ordering rules that apply to taking qualified distributions from a Roth IRA. So yes, in some you will be able to keep that date, but it's not necessarily going to apply to the money that you convert over under those ordering rules. As far as what you can convert, so it depends, right? You can convert all, if you make a $58,000 after-tax contribution to the solo 401k, you can convert it all over to the Roth IRA. Now, if you have other money in your solo 401k, right? Like let's say you have pre-tax money that's in that you contributed as an employee contribution to the solo 401k from your earned self-employment income. You generally can't transfer that type of money out until you're 59 and a half years of age. So you got to consider the source of the money and consider those distribution rules. So we've got a great page on our website that gives a lot more information on those rules. Let me chat over a link. Thank you so much for that good question. Hopefully that helps. Let me get another link here for the next question. Thank you so much. So as far as dealing with excess contributions, you've got to look at the type of contribution that was made in terms of your ability to remove it and how you fix it to this question. So I just chatted over a link to our page that talks about that in more detail. Thank you so much for the questions. Next question. I live in California and open a checkbook IRA LLC. When I need to pay the annual, yes, that is going to apply to the California franchise tax is going to apply to a California LLC that's owned by an IRA. Good question. I'm definitely nervous, so I'm expecting a good game at least. So here's to a good game. It's good to have some meaningful football in December. It's definitely an unusual experience for a Michigan fan. Next question. Please clarify answer to Nikolova, excuse me. You said self-directed IRA at TD Ameritrade can be used to own an IRA LLC. Oh, excuse me. Then I misspoke because you need to have a self-directed IRA at a specialty custodian that allows you to invest in an LLC. Certainly an IRA at a brokerage like TD Ameritrade, they're not going to allow you to transfer the money to an LLC. If you were to do that, they would report that as a taxable distribution. So you've got to go to a company like Forge Trust, like you mentioned, that offers IRAs that they allow you to invest in an LLC so you can have the checkbook control. Next question. If I have a 401k via W-2 job maxed at 19.5 with employer contribution of 12,000 and sole proprietor income of 120,000, do I have to aggregate all the 401k contributions to count to? Well, first of all, the max is $58,000 for 2021. So you do not have to aggregate for purposes of the overall limit. You would disregard also the employer contributions made to your day job, W-2, employer sponsored plan. You would have to aggregate. I mean, you wouldn't be able to make any more employee contributions to the solo 401k, the 19.5, because that's the employee contribution limit. It applies at the employee level. But you could still make the employer contribution to the solo, which is always a pre-tax, or if you're just trying to maximize money going into the Roth solo 401k sub account, you could make a $58,000 voluntary after-tax contribution to the solo. Don't make any employee because you can't, because you already used up your limit of your day job plan. Skip the employer, just make 100% 58,000 to the voluntary after-tax solo 401k sub account, and then move the money over to the Roth solo 401k sub account. So that voluntary after-tax limit is not reduced by employee contributions made to a plan sponsored by an unrelated employer, nor by employer contributions made to a plan sponsored by an unrelated employer. So if your business, another great question, what is the best method to contribute the entire 58,000 in Roth dollars? What salary would you need to have to contribute the max contribution of 58,000 in 2021? And this goes right to one of the main problems with the ban that was going to go into effect right at the end of the year, is that a lot of folks don't know exactly how much they've made until after the end of the year, right? So if you are, you're eligible, you're self-employed, earn self-employment income, no full-time W-2 employees working for any business owned by you or a spouse, if any, you can set up a plan here by the end of the month, meaning just sign the documents. That'll preserve the right for you to make contributions all the way up until your business tax return deadline next year. So if your business is taxed as an S Corp, for example, that's going to be March 15th or September 15th if you file a timely S Corporation tax return extension. So in that case, when you have a business, a self-employed business that's taxed as an S Corp, your ability to contribute to the plan is based off of the W-2 wages that you get from your self-employed business, taxed as an S Corp. So if you wanted to put in 58,000 via the Mega Backdoor Roth, you would need at least $58,000 of W-2 wages from your self-employed business, taxed as an S Corp. You could contribute 19.5 as an employee contribution deposited into the Roth solo 401k sub account, and do the difference of 38,500 into a voluntary after-tax solo 401k account, and then move the money from the voluntary after-tax account over to the Roth solo 401k sub account. And that move is going to be a reportable event. So you would let us know. We have an online form where clients let us know about the after-tax to Roth in-plan conversion to give us the information that we would need to prepare a 1099-R, because that's going to be reportable. But again, we handle that as part of our services for no additional charge. Next question. I have the solo 401k plan. Thank you so much. Can my spouse roll over her IRA into the plan? What are the minimum requirements? Do I need to give her wages to be able to roll over? Please note this is only a rollover of IRA. So one of the exceptions to that one participant requirement that applies to solo 401ks is for a spouse who's working in the business and reporting, for example, her own earned self-employment income. So that could be W-2 wages, right? If the business is taxed as an S Corp. That would justify and demonstrate that the spouse is working in the business and therefore eligible to participate in the plan. Each spouse would be a trustee of the plan, so they'd be listed on the plan documents. A separate sub-account would be set up in the name of the 401k for the benefit of the spouse. The spouse can then roll over money from a non-Roth IRA. So you can't roll over money from a Roth IRA to any type of 401k, including the solo 401k. but you could definitely roll over money from a pre-tax IRA. And we would prepare the paperwork to handle that rollover. The IRA provider would write a check payable to the name of the plan and mail it to her address. And then she would deposit it into her solo 401k sub account. Hopefully that helps. But I mean, there's no real minimum amount of wages, but it needs to be legitimate and consistent. Okay, next question, here it is. I currently have a SEP IRA. If I do the solo 401k, do I lose the ability to do the SEP IRA? So you can, it is possible to have a SEP IRA and a solo 401k. However, if it's a 5305 SEP IRA, meaning that the SEP IRA provider used the Safe Harbor IRS Form 5305 to establish the SEP IRA, you cannot contribute for the same year to both the SEP IRA and a solo 401k. So hopefully that helps. If you look at our website, we've got a lot of resources, of course, and one of those is going to be solo 401k versus SEP IRA. And we talk about that specific issue that I mentioned. Here we go. Next question. I'm doing a rollover from my workplace to my solo 401k. Can you tell me which bucket the QNEC and Safe Harbor match should go into? So presumably that money is pre-tax money, right? Because it's matching funds that your employer contributed. So, and presumably you're no longer employed, because if you're still employed, you're probably not going to be able to roll over the money to any type of retirement account, whether it's an IRA or a solo 401k. So given those presumptions, the money would just come over as pre-tax money via check payable to the solo 401k and then deposited into the pre-tax sub account. Thank you so much. Hopefully that helps. Next question. Can after-tax voluntary contributions be converted to a personal Roth IRA rather than to the Roth solo 401k sub account? Definitely. So those voluntary after-tax contributions, if the plan allows it, which ours does, can be transferred out of the solo 401k to a Roth IRA. There's no triggering event. It's going to be reportable, just like the after-tax to Roth in-plan conversion. And we have a form on our website. If you go to mysolo401k.net, in the upper right, there's a link to forms. And then on that page, you can find these different forms. So it's an online form to give us the information about that after-tax to Roth IRA rollover so that we can capture that information and prepare the required 1099-R. Next question, is the 401k EIN different from my business EIN? I already have a business EIN. It is different, and it meets the regulatory expectation. The IRS has had information on their website about the need for a separate EIN for a 401k for some time. It actually, and before that, we've always had the same guidance on our website. They actually track a lot of the language that we have on our website. So, and it makes sense, right, for practical purposes, because let's say that you have a solo 401k bank account, right, that's interest-bearing account. The bank will have to report that interest earned to the IRS on a 1099 INT. So if you had opened up the account at the bank, and of course the bank is going to require a tax ID that's required to open up the account. So if you were to give the bank the EIN for your business, now they're going to report that interest under your business EIN number, and the IRS is going to look for that income, which you're not going to do, but it's going to look for that income to be reported on your business tax return. And you're not going to do that because and from your perspective, it was earned on a tax deferred basis inside your solo 401k. So we obtain a separate EIN specifically for the plan that lets the IRS know that this EIN is associated with the 401k. So not to look for that income, right? Because it's growing on a tax deferred basis. Next question, if my business was a sole prop when I created a solo 401k, Then I created a S Corp LLC next year. Can the solo 401k follow me to the new LLC? Does it need a new EIN for anything? So you're definitely free to reorganize your business, right? From say a sole prop to an LLC. It would be the same plan. We would just need to update the plan documents, but you wouldn't need a separate EIN or a new EIN for the solo 401k. That solo 401k EIN would continue. You wouldn't need new accounts. You wouldn't need to change your investments, etc. So it would really be a matter of updating the plan documents, which we would simply do once you gave us the name of that new entity through which you operate your business. Next question. Can an existing solo 401k loan transfer over to my solo 401k from other brokerages? So if you have a solo 401k, right, for your self-employed business, and you have an outstanding loan, assuming you don't have any employees, etc., you can restate that plan under our plan documents and just continue to pay the loan back according to that payment schedule. Now, of course, for practical purposes, it's going to be important that you make sure you've got all those loan documents in good order before you switch over, because if once you switch over and you try to go back to your preceding plan provider, they may not be able to give you those loan documents, right? Because it's going to be on you to continue to pay back the loan according to the payment schedule. So in sum, the plan continues. It's just being governed by new plan documents, which our documents, of course, allow for a loan, and you can keep paying that loan back according to the same schedule. Next question. You keep emphasizing Roth accounts. I need to contribute pre-tax money to my solo 401k to reduce this year's tax bill. What is the max amount I can put into my solo 401k and not Roth? So we have if you look at those contribution guides that we chatted over before, and we can do it again, we have a set of guides that talk more about making pre-tax contributions. So you've got two types of contributions that can be made on a pre-tax basis. You have employee contributions, which is going to be 100% of your self-employment compensation up to $19,500 or $26,000 if you're 50 or older. And then you've also got employer contributions, which is a percentage of your self-employment compensation. That's the limit. So let's say, for example, that you have a self-employed business taxed as an S Corp and you're under 50. In that business, from that business, you receive $100,000 of W-2 wages. You don't make any contributions to another retirement plan, like a day job plan. You can contribute 100% of your W-2 wages up to $19,500 as an employee contribution and make that as a pre-tax contribution. On top of that, you can make an employer contribution equal to 25% of your W-2 wages from your business tax as an S Corp. And that would also be pre-tax. So for a total of $44,500 into that pre-tax sub account. So thank you so much. Hopefully that helps. No. Next question. Could you roll over funds in a Roth solo 401k to a personal Roth IRA at any time? No, you have to. So if you've made voluntary after-tax contributions, you can transfer those over to a Roth IRA. But if you have money in a Roth solo 401k, right? Let's say it was an employee contribution, $19,500, for example. You've got to consider the distribution rules, and generally you can't transfer that money out until you're 59 and a half years or older. Here's that link again. Thank you so much for the question. So yes, you can have non-owner employees working in your business as long as they don't meet the eligibility requirements. So let's say they work less than 1,000, they don't work 1,000 hours or more per year, or they don't work 500 hours or more per year for 3 consecutive years. Next question. Can high income individuals, not self-employed, like a Google employee, able to contribute after tax up to 58,000? Yes. Unlike a Roth IRA, where if you make too much money, you're not able to make a Roth IRA contribution, there's no income limit on the ability to contribute to a solo 401k. So if you have the earned self-employment income to justify it, you set up a plan, you can make that full after-tax contribution. So it's actually quite popular with professionals, medical professionals, et cetera, who are looking to make those mega backdoor Roth contributions. Next question, is the backdoor voluntary contributions based on net self-employed earnings or gross earnings? So it's going to be based on the net, right? Let's say you're self-employed business, you report the income as a sole proprietor on Schedule C on your 1040. You would start out with line 31 of Schedule C, which is your net income, right? After your expenses associated with your business. And then you reduce that figure by 1/2 of the self-employment tax. That gives you self-employment compensation for someone that's reporting their earned self-employment income as a sole proprietor. Of that number, you can contribute 100%, dollar for dollar, up to $58,000 for 2021, as long as you set up the plan by the end of the year, reduced by any employee or employer contributions made to the plan. Thank you so much for all for the feedback. We appreciate your participation. Can you convert from Roth to pre-tax? No, you cannot. It's only a one-way street, pre-tax to Roth. Follow-up, for my solo 401k, can I shelter 20% from taxation, employer contribution? Can I use? Definitely. Yeah, you could just make an employer contribution, right, to get that pre-tax benefit, subject to the limit, right? It's going to be a percentage of that self-employment compensation. And then if you haven't gone up to that full $58,000, which is the overall limit, you could make do the rest, right? Like in your example, as a voluntary after-tax contribution into a separate voluntary after-tax sub-account, and then move it from the voluntary after-tax account to the Roth solo 401k sub-account. So at the end of the day, you have your pre-tax account with that employer contribution that reduced your taxable income, and then you'd have your Mega Backdoor Roth contribution in the Roth solo 401k sub-account. Next question, what are the pros, cons for first contributing to the traditional or voluntary if you'll eventually roll over to the Roth? Well, so that you could do that, right? You could, like, let's say that for 2021, you wanted to reduce your taxes. So you made the contribution as a pre-tax 2021 contribution. And then you converted from your pre-tax sub-account to your Roth sub-account in 2022. So that means now you're effectively going to take that income from 2021 and move it to 2022. So you're punting on paying that income tax for a year. I suppose the con would be that you are deferring the tax-free growth, right? So all the income that you earn in the intervening period would now be taxable if it's in that pre-tax account. Good question. Hopefully that helps. Next question. I have a solo 401k and would like to add a solo Roth. I'm starting a different business and would like to contribute some of the founding shares to the solo Roth. That's a great question, but it's not possible. You need to contribute cash to your solo 401k, not assets, and certainly not assets of the business. I mean, I should say shares of the business. Did you answer the question? Well, we gave resources on it. I mean, in some, the rules depend on the type of contribution, right? Whether it was an employee or employer. For an employee contribution, you have until April 15th to remove the excess contribution. I'll send over a resource. Next question. In December 20, I opened Solo 401k using a new EIN. I'm in healthcare. I use the same EIN with insurance company I'm in network with. It seems this is problematic. What's the solution? So I would say get an EIN for the Solo 401k and update the accounts accordingly, so that you can obtain one on the IRS website for the plan. Hopefully that helps. Keep in mind that if you have a basic Solo 401k, right, where you obtain that Solo 401k from a brokerage like Fidelity or Schwab, they will not get a separate EIN for the plan, notwithstanding the guidance from the IRS, right? So, and that's because they're not doing any tax reporting, so they can control it, and for their own administrative ease of not having to go out and get different EINs, that one can deduce that that was the business decision that was made. So it may not be that big of an issue, but if you think it is, I mean, you're going to want to work with your tax advisor, et cetera, but you can get a separate EIN for the plan. So hopefully that helps, at least in the context of this session. Next question. Can you contribute $6,000 to your Roth IRA in 2021 and also $58,000 to a Roth Solo 401k in 2021? Yes, you can. You've got to have, the separate earned self-employment income to justify that Roth Solo 401k. You'd have to do it as a mega backdoor, right? Because that's how you get to that $58,000 limit. But yes, it certainly can be done. The fact that you're contributing to a Roth IRA does not reduce your ability to contribute to the Solo 401k. Looks like I think we answered this question. Let's see. Does the total of after-tax and pre-tax amount have to equal the net income minus the 1/2 of self-employment tax? Well, yes. So, I mean, another way to say that is you can't save more than you earn. But, I mean, it doesn't have to equal it, right? I mean, you don't have to save as much as you earn, but you can't save more than you earn. So, in other words, you first have to figure out your self-employment compensation. You can't contribute more than that, but you can contribute more than the lesser of that self-employment compensation, or, of course, the limits, right? So we offer, we actually do daily webinars on our My Community website. So I would encourage you to please join that. We also have forums where people are posting questions throughout the day. This time of year, at this point, there's so much demand that it's more difficult to have one-on-one sessions, but certainly in January, we'll be resuming those. So absolutely. Thank you so much for your participation. If the Build Back Better Act is not passed by early January, is there any reason you can't contribute $58,000 via a mega backdoor to your Solo 401k for 2022 if no bill has yet been passed? So, yeah, there's no reason, right? Because even if they end up passing it in 2022, the earliest it's going to become effective is January 1 of 2023. So that means you can still make those 2022 Mega Backdoor Roth Solo 401k contributions. So with today's news, it's really 2 years, right? If you set up the plan by the end of the year, you can make the 2021 Mega Backdoor Roth Solo 401k contributions, and then still be able to also do it in 2022. Next question. If I transfer money from the SEP IRA to the Solo 401k, can stock shares be transferred or stocks have to be liquidated? No, you can transfer the assets in kind, right? Let's say that, because we have clients at we've got clients of hundreds of different banks, as well as many different brokerages, right? Like Fidelity, Schwab, TD. Let's say your SEP IRA is a TD, right? We would prepare the paperwork, if you want us to do so, to open up a brokerage account at TD. So you could just do an internal transfer, and we'll prepare the paperwork also to transfer it from the SEP IRA at TD to the new brokerage account at TD for the solo. So that could be an internal transfer in kind where the stocks, et cetera, transfer over. Thank you so much for all the participation. We've actually got a hard stop at the top of the hour, but it looks like we're coming to the end of the questions. I really appreciate it. If you're not self-employed and you cannot have solo 401k and your income is high and you can't contribute to the self-directed IRA, is there a way to contribute to the IRA through the Mega Backdoor Roth? So if you're not self-employed, you can't set up a solo 401k. So all you'd have left to do is your backdoor Roth IRA if your income is too high. So then you'd have to consider those pro rata rules, right? So that's really the best that you could do. Is there an advantage to have both the Roth solo 401k and a Roth LLC? Can you do something with the LLC that you can't do with the Roth solo 401k sub account? So no, you cannot do anything in terms of investments, et cetera. I would say the only reason someone would do that is they have money in a Roth IRA that they want to invest in alternative investments, because they're not going to be able to move the money from the Roth IRA to the solo 401k because of those Roth IRA rules. Pro rata rules, what are the pro rata rules? So if you have, let's say, pre-tax money in an IRA, and then you make a non-deductible IRA contribution because your income is too high to make a Roth IRA contribution, you can't just transfer that non-deductible money only over to a Roth IRA. They look at, it's like all the money is combined together. So when you transfer the money over, it would be based on the ratio, based on that pro rata ratio of pre-tax money in your IRA versus non-deductible IRA money. And they look at all your IRAs as if they're one IRA in applying that rule. So what people will do is they will try to flush out the pre-tax money out of their IRA, then make the non-deductible IRA contribution before they transfer it over to a Roth IRA. One question. I currently have a solo 401k with Fidelity. Can I top off the pre-tax contributions and then do a restatement? Certainly. Yes. I mean, subject to, of course, to the contribution limits. And yes, then you could restate the plan to a plan that allows you to do what you want to do, whether it's mega or alternatives, etc. Yes, it's going to at least be pushed. So what we know for certain is that it's not going to be enacted by the end of the year. So what does that mean? That the earliest it would become effective would be January 1 of 2023, but possibly later, right? I mean, there's a lot of variables. Well, thank you so much for all the great questions and all the participation. Thanks for staying on. And please like the video, please subscribe, please join the community to continue the conversation, mysolo401k.net/my community. Please also, of course, sign up if you want to meet the deadline. So mysolo401k.net, and you can submit the Solo 401k app. We're going to have to try to go real quick on these last couple. So you could tell the payroll provider what you're going to contribute as an employee contribution, park the money, and then make the contribution by the business tax return deadline. Thank you so much. Yes, but you got to consider the ordering rules when it comes to taking money out of a Roth IRA. Technically, you could pay her. She has to be working in the business and reporting some type of earned self-employment income. She could technically get a 1099 miscellaneous, or now they call it NEC, and report it as that. But typically, folks would do it as a W-2 if the business is taxed as a W-2. If it's a sole proprietor, though, she could just report her own Schedule C. So if you have a Schedule C, she has a Schedule C. Yes, there's still enough time. All you got to do is sign the documents by the end of the year to lock in the ability to make the contributions anytime up until the business tax deadline in 2022 for 2021. And we prepare those documents, we email those documents to you within the same day or 24 business hours. So yes, because of the deadline being pushed out, as long as you set up the plan, meaning sign the documents, you can make those mega backdoor Roth contributions for 2021 anytime up until your business tax return deadline. Okay, thank you so much, everyone. Take care, and we really appreciate it. Thank you.